Alrighty traders, George here, and time for a look at the week in review. For starters, these are the setups for the subscriber signals that went out earlier in the week. The setup for oil and the setup for the NASDAQ. Alright, and then for the NASDAQ, real simple, classic no trade. Alright, so the balance beam doing us a nice service here and showing us where that trading commitment is, and simply just not falling prey to being within that zone. So the bulls weren't strong enough to break it higher, the bears weren't strong enough to break it lower, and it's a great no trade for us there. On the other end of the spectrum, we had oil, which really rang the bell quite nicely here. Keep in mind that what I'm doing with these balance beam signals is I'm sending them out to you subscribers with the intent of you guys having a one contract strategy, at least some of you with smaller accounts, and being able to use that small risk and big target potential of the balance beams to grow your accounts quicker and more efficiently than you can any other way. So for oil here, we had 3 target 1 hits on 3 entries, and we had 2 target 2 hits. Very efficient there. So if you're in multi-contract, you're picking up even more here, but for the single contract trader, you're getting $470 a pop each one of those 3 moves down. That's $1,410 per contract. Here's what it looks like on the spreadsheet here. And you didn't see a video from last week due to some technical issues, but here's what happened. We were 3 for 3 on the euro, 0 for 2 on the NASDAQ, and 1 for 1 on oil. That put up $522. This week we're 3 for 3 on our target ones for oil there, $1,410. And that puts our equity curve at $43,774 through 2016. We're at current yearly highs here on the equity curve, and as I talked to you guys about this yesterday in training, what you'll see in an equity curve, if you're doing things right, is you'll see at some point a pullback or somewhat of a plateau. We've been, of course, balance beam traders here, so we're really able to manage the downside very efficiently. That's why you don't see any big pullbacks here, and you will see some sideways contraction, just like we do with the structure of price. And here is that sideways contraction giving way to more gains coming, and we're currently Friday, June 3rd, at equity highs on the year for the balance beam signals that have been going out. Now, if you want to get these signals in advance and be a subscriber, that's fantastic. Use the link below this video and you can get those. And if you want to take it a step further and use the balance beam model and learn to do what I do, find your own signals, trade the markets that you want to trade, stocks and futures, you can do that as well at the same link. And before we head off, I'll give you guys a signal for the weekend here. If you were in training yesterday, we talked about this, and this is Oracle. It broke down big yesterday. It's a top 20 cap weighted stock. Something jogged the traders collectively to gap this thing down, and really what it did here is what we call the pass-through. In balance beam terminology, this is where the market turns from a very bearish moment to a pretty bullish moment here. It's very under the radar. It seems like it's very negative at the point where we're breaking to new lows here, because it is. We're breaking below all the key trading commitment, and all of a sudden some people start to cover their shorts, some bottom feeding longs come in, and then as it trades a bit higher, shorts that had more gains, of course with no rules, they see some of those gains erode, they get nervous, they start to cover, and traders that wanted to be long down here that were waiting, now they can't stand it, they got to get in here, and so on and so on. And it starts to pull price up dramatically. So we're a few pennies higher than where we talked about getting long to see a little bit more bullish price action move us over this balance beam here. But there is a very high probability that with this swing low here holding, that we're going to go up to about 41. Conservatively 40.59 here, but this is just a performance target, not to take any gains here. What we really want to see is something much bigger picture, which would be the bulls regaining territory here, pulling back a bit, and then having a go over 42s or so, upper 41s. And when they do that, they're really moving into an area where they can really take charge, and we'll take half of our position off at 43.64s at that point, and the rest will come off at 46.70s. At least that's the initial. But that's underway right now. This is a classic long signal here for Oracle, and it's a bearish one that turns bullish very quickly. We'll see if that swing low holds. For you subscribers out there, stay tuned to your emails. You'll be getting a new alert for the first part of next week for some new trade signals, just like you saw here. All right, gang, thanks for all the great comments in training yesterday. We'll look forward to seeing you back in training on Tuesday.